John's life. Dennis, go on a journey and think of me. Dennis, go now, legendary wolf of my dreams. My doggy, doggy, doggy. My Dennis. Ow.
Hello everyone. In this video, you started off listening to a clip from Minecraft movie 2025 released version where the main character Steve, he talks about his dog Dennis. My sons have been quite obsessed with Minecraft, and every time I look into their creations, they have a secret pet, and they call this like their wolf dog, and my son always names the character as Maxmillion. So this is a dedication story for Maxmillion. So I use the name here, reminding of the name of the dog, future dog that we would have one day, because my sons are quite obsessed with this name. Regardless, moving on, Maxmillion, again, this example will teach you how to calculate taxes. And in case if there is any additional income apart from your regular salary, what would happen to your taxes? That's what we're going to see. So bear with me. There are a lot of calculations. Have a calculator handy to go and follow along with me. So now Maxmillion has a gross annual income. So a gross annual income is the income that you see on the paper. Is roughly around 133K and has a tax deductions of $26,800. Now, tax deductions are deductions that would help you to reduce the income. That's a good thing because you would pay less taxes. And I already talked about what tax deductions are. Check out the other video where I talked in detail about the definitions as well. Now, he's required to pay the Medicare levy, 2% in Australia. We all know that there's Medicare. Um, and there is a price that you need to pay, which is 2% of your taxable income. And then finally, another word is PAYG, pay as you go tax, which means that every time you have a paycheck, certain amount is being put aside for paying taxes. And that should help you to not feel a burden of paying off a lump sum at the end of the year. Okay, so this is a good thing. Now, this is called a tax table. So we look at our taxable income and then we see how much taxes we need to pay back to the government. So let's calculate the taxes like a pro. So now in this situation, what is the taxable income? Taxable income must be calculated by subtracting the tax deduction. So from gross income, you are taking away the deduction, so you will end up having a taxable income of 106K. Now, where is 106K? Now, come back to the table and see where did I put 106K. It is 1, 2, 3. It's in the third row. So, what does the third row say? It says pay 4,288 flat plus 30 cents for each dollar over 45K. So you need to subtract 45K from your taxable income, and for the remaining balance you're going to times that with 0.30 because 30 cents must be converted into 0.30, and you would end up with this, which is 22,663. Now there's a Medicare levy of 2%, so 2% times taxable income, and you would end up with 2125. So adding the box 1 and then this check mark that I use for 2, the total amount that you should be paying to the government is 24,788. Now your pay as you go is less than what you owe because your pay as you go is 22,100. So once you subtract these two numbers, you still need to pay $2,688. Now, when you have to pay back to government, it's called tax liability. All right. Now, let's see the additional question here. Suppose Maxmillion earns an additional $5,000 in overtime. Poor thing. He thought that working hard and earning more, he would keep more money in his bank account. But let's see what happens. Does he really get to keep all that money? Absolutely not, because there's something called as tax, right? So let's calculate the new taxable income. So you add the 5,000 to your gross, and then now your new gross is 138K roughly, right? Now your taxable income is after deductions. This is what you're looking at, 109,450. Now, by looking that amount in the income tax table, 109K still falls under third row. So then what does that look like? So you still have to pay 4,288 flat plus 30 cents, and then you would subtract this amount. So when you get rid of 45K from your amount, you would end up having 64,450. Now remember, only for this remaining amount you're paying 30 cents. So that would end up total as 23,623. Now the new Medicare levy, remember, it's 2% of taxable income. So because your taxable income went up, your Medicare levy also went up. So now the total amount that you should be paying to the government is, by adding the two numbers at this point of time, I'm hoping that you have a calculator and you are punching in those numbers as fast as you text to your friends, right? So type and check, and what do you see? You should be getting 25,812, but your pay as you go was only 22,100. So what is the remaining balance now? Again, I'm hoping you're typing, and voila, there you go. Now that is tax liability, so that means you have to pay that amount back to the government. So by having an extra $5,000, your taxes, instead of paying 2,688, it went up to 3,712. So that means extra 1,024 for taxes. Unfortunately, guys, whenever there is more income, there's more tax. Remember that. It's as simple as that. Just look up your table and follow the steps and calculate the over amounts, and there you go. You can be now a professional tax calculator or a tax agent. Thanks, guys. Thanks for watching, and I hope you enjoyed this video, and have a wonderful, blessed day. Bye bye.